Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys. In the second video today, as usual, let's take a look in the gold market. So gold has shown a lot of volatility yesterday, but no significant action. So you can see the third day in a row market forms very small trading range. So you can see just very narrow price difference here between open and close and top and low. So it's very tight trading range then. So as a result, we don't have really significant patterns, and well, yesterday it was a bit not everything as good as we have suggested, but in general the price action that we talked about has happened, but today we have to be careful. So take a look what actually we've got yesterday. On the daily chart we don't have any big changes. This market stands tight, trend still stands bullish on the daily, but you can see that that's really has no impact on the daily chart. On the intraday chart, market has shown high upward action, mostly raising this reversal candle that we talked about, but then drop still happened. So that was just a few cents above this top. And take a look what market has formed. Here we've got bearish engulfing pattern, and this, as I call it, two candle bearish grabber. So sometimes the grabber happens not only by the single candle, but in the two candles. When the market first turning trend in the opposite direction, then return it back down, so return back to the bearish trend, and that has formed, as I call it, the two candle bearish grabber as well. So this grabber suggests some downward action. So here we continue to follow our trading plan to dealing with just minor candles, minor patterns, and take the nearest standing targets. Currently, it's a bit risky trying to suggest and making bets on the long extended targets, long extended swings on the market. It's better to focus on the nearest standing targets. So on the hourly chart, here is something to watch for. We see market here is forming a bit greater, kind of the hand and shoulders or something of that sort. So you could even suggest some more flat neckline here. Could become left shoulder, kind of the hand, and now it's right shoulder is forming. The one thing that makes this trade risky is, take a look, we have the hidden bullish divergence with the current lows. So here's indicator shows lower lows while the market forms in high lows. It means that you should be careful and be prepared to possible failure of this setup, because currently market stubbornly do not want to show the downward continuation, because in general forming on the reverse candle here in the follow time frame chart with the reaching of the major XOP should be enough for a downward continuation. But instead of that, reaction only on XOP has happened. This market shows high action, grabbing the stops above it and then showing another drop. So it looks like the speculative games and shorter term perspective on the market. It's really some stop hunting action or something of that sort. And that's why you have to be careful with this. If you will decide to take the short position based on this, either hand and shoulders or directly regardless cheaper to sell, when the market drops to the neckline, think about definitely move stops to the break even and think about maybe take some profit here as well. Do not marry any position. If market will hit the first support is 1472 OP here, take the profit here in this position. The opposite scenario, if market suddenly will start moving up, taking out of this A point, it will mean that no downward retracement will happen and market will return it back up to this level. It's challenging 1486. That will be a very important moment in the current situation. And indirectly you could see that this divergence suggests this scenario, so that this pattern, let's call it as a head and shoulders, will fail and market could really show upward action because of this pattern that we have. So, as you understand, the situation in general stands tricky. If you're not confident enough with this setup and not want to take the part in this, well, for truth's sake, let's call it not superb trading setups. It's better to sit on the hands and wait what will happen, or wait for clear signs. For example, if market will break up the A point, then you could plan taking the long position on some retracement, something of that sort. If you still would like to trade it and will decide to take the short position, be careful, watch for A point, keep in mind these hidden divergence, and if market will break it, well, it's better to close it. That's also leads you to conclusion that any drop here, this will be successful action, and don't forget to manage your stop to the break even. Think about the profit taken. So that's what we have on gold market. As you can see, market for the third session stands in very tight trading range, and here we could follow just to the very small patterns that are forming in this consolidation.